Is Energy Transfer ticker symbol ET a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Energy Transfer using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Energy Transfer is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Energy Transfer stock to your portfolio. Right now, Energy Transfer trades for $15.70 per share. In its last day of trading, it's up 1.42% alone. Since June of 2023, Energy Transfer has about kept pace with the S&P 500. That's pretty impressive given its concentration in high flyers. Since the pandemic, Energy Transfer has beat the market, compounding at 12.3% annually. However, in the last decade, their stock price is actually down 46.6%. This is coming off of Energy Transfer's all-time highs. Since they went public, Energy Transfer has compounded at 5.1% annually. But they've given even better returns to shareholders through their dividends. Right now, Energy Transfer has a huge market-beating 8.2% dividend yield. When they're added to the gains in their stock over this time, those are huge returns for shareholders. Energy Transfer typically doesn't have a lot of volatility in their stock. They're down 70 cents from their 52-week high, and that's up just $3 from their 52-week low. And how big is the company? Today, they have a $52 billion market cap, and they use a lot of debt as a midstream MLP, so they have a $118.5 billion enterprise value. Getting started with our first metric, we want their average returns on capital to be greater than 14%. Returns on capital tell you if you're providing value, and the average return is around 7%. When we look for an average that's double this, we can build in margin of safety based on the quality of the business. For Energy Transfer, it's going to be difficult for them to have high returns on capital. This is due to the large amount of debt that they use in their business. Still, we want these to be as high as possible, and in the last 5 years, they bounced around between just under 7% to just over 9%. When they're averaged out, Energy Transfer earns around 8% returns on capital. It's down from the double-digit mark we'd look for in a midstream business, and it's below that 14% threshold. This is an X on our first metric. Now, what does the company do? Energy Transfer owns a large platform of crude oil, natural gas, and natural gas liquid assets primarily in Texas and the U.S. Mid-Continent region. It also has gathering and processing facilities, one of the largest fractionation facilities in the United States, and fuel distribution. Energy Transfer also owns the Lake Charles gas liquefaction facility. It combined its publicly traded limited and general partnerships in October of 2018. And back in 2023, they made a $7.1 billion acquisition of Crestwood Equity Partners. In May of 2024, Energy Transfer announced that it's acquiring WTG Midstream in a $3.25 billion deal. The company owns and operates the largest Permian gas gathering and processing business and has most of its core assets in the Midland Basin. Energy Transfer is still active on the M&A front. Next, for a midstream business, we want both sales and free cash flow growth. In the last 5 years, Energy Transfer has increased their sales by 50%. This comes from a rebound since 2020 and that big acquisition in 2023. Their free cash flows have grown even better than their sales. They're up 3 times over these last 5 years, and that's from increased cash from operations while the company's decreasing its capex at the same time. Hopefully, it's still spending enough on maintenance, but that's a lot more cash in shareholders' pockets. It's our first check on metric number 2. Energy Transfer is in the portfolio of 4 super investors, including large positions from David Abrams and Leon Cooperman. It's been a great winner for Abrams, who timed his purchase of the stock back in 2020 very well. In our third metric, we want their shares outstanding to be decreasing. This isn't the case for Energy Transfer. They paid for their 2023 acquisition using all shares, and the company steadily diluted shareholders in all 5 of these years. It's not uncommon for asset-heavy businesses like this to issue shares, and that's something we commonly see with REITs as well. Overall, their share count is up 23% in this time alone. It's not ideal, and that's an X on metric number 3. Still, it's not all bad for the company. We'll see why in our next metric. Metric number 4 puts our last 2 together. Here we want free cash flow per share growth. This, coupled with high returns, really creates value for shareholders. Energy Transfer has more than doubled their free cash flows per share over this time, with their free cash flows tripling but their share count increasing. In 2019, they had 80 cents of free cash flow for each share outstanding, and this increased to $1.88 at the end of 2023. Today, in their last 12 months, they bring in $1.99. That's up, and it's a check on metric number 4. So far, things are split evenly. We have 2 checks and 2 X's. Now let's look at their dividends before we check out their balance sheet. Right now, Energy Transfer pays a huge market-beating 8.19% dividend yield. This is one of the highest yields of a well-established business, but we still want these to be sustainable, which means we want them covered by their free cash flows. Since 2021, they easily support their dividends using their cash flows. Today, they still have a reasonable dividend payout ratio, which is exactly what we want to see. It's a check on our dividend bonus. Next, great companies can grow, earn high returns, and don't use a lot of debt. Energy Transfer is a little different. The company has a lot of stable fixed assets which are able to be levered more like real estate. Because of this, midstream and MLP companies use higher leverage, typically. Energy Transfer's kept their net debt around $50 billion in most of these years. Today, it comes in at $52.3 billion. In their last 5 years, they brought in $24.8 billion of free cash flow. That might be a lot, yet it's still half of their debt levels. Dig into the company to learn how their debt is structured and when it's due. Looking at this slightly differently, in the last 5 years, they've only brought in $45 billion in cash from operations. That doesn't cover their debt levels either. Because of this, it's an X on our fifth metric. Now, before we figure out how much Energy Transfer is worth, why don't we check in on our bonus? Warren Buffett's teacher and the father of value investing, Ben Graham, wanted to see a current ratio greater than 1.5 times. This is a key measure of short-term liquidity for how a company can pay its bills in a hurry. It's their current assets divided by current liabilities. Energy Transfer's current ratio hovers around 1. Today it's 1.18, which is still down from that ratio we wanted to see of 1.5 times. As a midstream MLP, it's slightly different for Energy Transfer and it might not be the most concerning sign. Still though, it's less than what we wanted. It's an X on our safety bonus. Now, how much is Energy Transfer worth? The big metric of them all, metric number 6, is also our first valuation. Here we want Energy Transfer's average cash flows divided by their enterprise value to give us a yield above 5%. This is in line with the historical yield from the S&P 500, and it gives a slight risk premium to the 10-year treasury. When we add their market cap and their debt, we get an enterprise value of $118 billion, which helps us look at ET more like it's a private business. In an average year over this time, they bring in just under $5 billion. So when we divide that by their $118 billion enterprise value, we get a 4.2% average yield. They brought in $6.9 billion of free cash flow in their last 12 months, and that's around their 3-year average as well. When that's divided by their enterprise value, it gives us a 5.8% current yield. That's better than that 5%, but because we're split here, it's an X on metric number 6. Don't just throw the company out. Watch our next 2 valuations before you stay till their final fair value at the end of the video. Next, we'll use a DCF model to estimate their future growth. We'll start with their last 3 years of free cash flows, then use historical estimates for the future. Outside of acquisitions, their company has declined organically. Because of this, and maybe more expensive debt in the future, we'll assume that their free cash flows decline by 5% in each of the next 10 years. Then in the following decade, we'll assume these decline by 4%. We'll then add in the company's tangible book value to give an estimate of their net worth. With that, if we want a market-beating 15% rate of return, which is what Warren Buffett looks for, then a DCF valuation today says Energy Transfer is worth possibly $17.50 per share. That's up $2 from their current stock price, but keep some key points in mind. Energy Transfer hasn't been that predictable in the past. This means this is a rougher estimate for the company. As a publicly listed business, they've gone through their share of boom and bust cycles. The company still trades 56% off their all-time highs hit back in 2015. Based on future estimates for their growth and their past multiples, today our third valuation comes in at $11.68 per share. That's down $4 from their current stock price. Now, Buffett likes the numbers, but it's the qualities of a company that are his true love. Why don't we learn what these are for Energy Transfer through a long and a short thesis? Let's start with a long thesis first. Number 1, Energy Transfer's consolidation in October of 2018 reduced the company's cost of capital. This helped fund its growth projects over the last few years. Number 2, Energy Transfer is diversified across markets, commodities, and geographies, giving the company access to many large customers. Number 3, Energy Transfer is well positioned to benefit from an outlook for growing natural gas liquid exports. But it's not all positives. Let's look at a short thesis too. Number 1, a long-running legal battle threatens to halt operations on the Dakota Access Pipeline. This demonstrates the substantial legal and regulatory risk Energy Transfer faces. Number 2, Energy Transfer has historically been active in the M&A market. This exposes the firm to the risk of overpaying for growth as the enabled transaction demonstrates. Number 3, rising interest rates could make Energy Transfer's distribution less attractive as a fixed income alternative. It can also raise the company's cost of capital. Now it's time for us to put everything together. In our fundamental review of Energy Transfer, we learned they go 2 for 6 on the Select 6 analysis. The companies increase their cash flows, but this comes with a high level of debt and a lot of issued shares. They do support their dividends, but their debt levels may be concerning and their current ratio isn't quite where we wanted. They earn just slightly above average returns, and they've largely had to grow through deal making. Yet the company is well diversified. Now the number one question viewers ask is how to find undervalued stocks even faster. This is why I use investing tools like this one, which shows Energy Transfer's fair value. Today it comes in at $13.50 per share. That's $2 below their current stock price and $5 under their street target price. Energy Transfer looks around fairly valued, and you can expect around average returns. To find undervalued stocks, sign up for our investing tools and get exclusive bonus coverage of 92 stocks and counting.